All right, good morning, everyone. Hope you're all doing well and staying healthy. Welcome to part 3 of our Business Prosperity During a Pandemic webinar series. This webinar is part of a series of free webinars that TaxForward will be offering on how to navigate through this environment. We invite you to attend our next webinar about personal finance and investment at noon today. 3 more webinars on tax, a continuation of this webinar, real estate and leases, and HR and job search matters will be announced early next week. We would like to hear your questions. You can send us your questions confidentially or to the group through the chat and Q&A features. Polls will occasionally pop up during the webinar. This is both to engage attendees as well as for CPE certification purposes. Please complete the polls to receive a CPE certification. You'll receive a survey at the end of the webinar. The responses are anonymous. Please help us improve our webinars by completing the survey. The surveys will close Monday night at midnight. We'll email CPE certificates once the surveys are completed. You'll receive more information about both in an email after this webinar. Summaries of our webinars will be posted on our site next week. If you hear or learn of something we should share with others, such as tools or guidance that is out there, please send an email to info@taxforward.org. Copies of the webinar will become available after the weekend. Let me just introduce myself to you. I'm Magnolia Movido. I worked at the Big Four for about 16 years as an international tax and global compliance and reporting professional. And I'm currently a counsel at Snell Wilmer, a full-service business law firm with more than 450 attorneys practicing in 15 locations throughout the US and Mexico. Our firm represents clients ranging from large publicly traded corporations to small businesses, individuals, and entrepreneurs. I'd like to thank our panelists for participating in our webinar today, and I'd like to introduce them to you right now. So we have Brandon Edwards, CEO of Tax Credit Company, a company with more than 100 employees that provides tax incentive services and solutions, who has over 20 years of experience in the tax incentives field. Our second speaker would be Eric Andersen, who's the Managing Director and State and Local Tax Leader for the San Francisco Bay Area at Andersen, who has over 25 years of experience in this field. And finally, we have Tadd Fowler, VP of Treasury and Global Tax Operations at Procter Gamble. Prior to joining P&G, Tadd was a partner of International Tax Services at PwC. So with that, let's go and start our webinar. I would like to talk about the positives first, given the news that came out last night about the US topping the charts in terms of the number of COVID cases. I think we'd like to hear something positive to start off our day. So let's talk about that first. Tadd, I'm curious to know what might be some strategies for moving priorities forward with the new working environments, particularly how we make choices on what to deprioritize, and what positives are we seeing from new ways of working that can be leveraged when things get back to normal?
Yes, thank you, Magnolia, for the question, and thank you all for joining this webinar today, and I appreciate your investment in this topic, and hopefully you will take something away from our conversation today that'll help you as you continue to manage and work yourself through these these very difficult times. But I think your question's a good one. I mean, what we've had to do is adjust the way we are working as a global organization. And regarding your question as to how we're making choices on what to deprioritize in order to continue to focus on the things to prioritize, I think that's how I would reverse the question, is really focusing on those things that are the most critical, and those things that aren't, certainly we are pushing those aside so that we can continue to do those things that are critical. Obviously, we're a taxpayer in many jurisdictions around the world, and we still have tax obligations, and so We want to continue to make sure that we are paying the right amount of tax at the right time, and making sure that governments are continuing to collect the revenues they need to continue to invest in their priorities regarding working themselves through this crisis. Certainly, we have a lot of interesting business cases that are coming up, and so we want to continue to have the capacity and the capabilities we need to be able to continue to connect and work with our business partners on making sure that they've got the support they need to deal with, circumstances that are coming up with crisis markets, making sure that we've got liquidity around the world that we need to continue to operate, and continuing to look at making sure that our suppliers and our customers can continue to operate. And so our ability to continue to come up with ways of helping our business continue to work through this crisis is of utmost importance. If I think about things that are being deprioritized, just given the increased focus on staying close to the business, certainly we always have a lot of different organizational initiatives that we're working on in terms of how do we continue to try to achieve productivity within our organization, so that we can focus on more value-added things. Some of those projects are currently being deprioritized. Like a lot of you, we're certainly looking at how to leverage technology, and how we continue to digitalize our work. And some of those projects have become a little more complicated with the current work situation. Just to be clear, most of our tax folks around the world are currently in a work from home environment. And so a lot of this work that requires us to be together to actually move forward, of course, are more difficult. And so unless it's dealing with, mandatory compliance, a lot of those we've kind of pushed to the side just to make sure we're investing in where we need to invest right now, helping the business continue to work through these crisis times. I think to your question on, are there positives to be taken away from the current work situation? Maybe that's a little bit of silver lining. And what we have learned, certainly over the last 2 or 3 weeks, is that we can focus on priorities. And sometimes, when not forced to do that, we can let ourselves drift and focus on things that maybe aren't as critically important. So I think, the ability to, kind of forcing us into focusing on priorities, I would view as something positive and something hopefully we can take away on a longer term basis. I think effectively communicating and making sure that we figure out ways to effectively communicate one-on-one as well as teams. I think leveraging the tools we have available to us and being forced to leverage those tools and doing things, less things face-to-face, I think is a positive that we can take away from the current situation. I think we've also learned that our business continuity plans are working. We do a lot of our tax compliance out of our service centers around the world, and a lot of those folks have been forced to do their work at home. And I think we've learned that we can still be compliant around the world and pay our tax obligations on time remotely and not necessarily be in the service centers to work. So I think the fact that we've had to force our business continuity plans into action and we've seen that they work has been a silver lining. Flexible work arrangements. I mean, obviously, our ability to be flexible with regards to people's schedules right now. And generally, as a company, we try to be very flexible with respect to folks' need to balance, work and life responsibilities. But I think in this current environment, it's become even more important that we're agile in that regard. And I think we've seen the positives of people continue to do what they got to do to get the work done, even though it may not necessarily be in a normal course of business or normal hours of business. And so I think that's been a real positive. And I think, again, forcing us on priorities has allowed us to deprioritize other things that may get put on the shelf for good. I mean, maybe we're realizing that some of these things weren't important to invest in. And so I think it's forcing us, again, to focus on what's important, focus on effective communication, test our business continuity plans, test more flexible work arrangements, and all of these seem to be working well, that I think we'll be able to leverage those as we get through the crisis. So with that, I'll turn it back over.
Well, thank you so much, Tadd. If I may just interject here, I was talking to Ashby Walters the other day, and we were talking about how more and more people, we do these webinars, and more and more people are showing their faces, on the camera. I think there's just this really deep need, to be connected to one another, because there are times, in the past when we have all of these, like whether it's like an instant message, kind of deal in our office. That's what we use. We don't even look at our other colleagues that's just on the other cubicle or another room, right? And now everyone wants to seem to see each other. So I think this is one of the positives that I have been seeing. It's like a craving, to be connected with one another. So that's great. Thank you so much for sharing that, Tadd. And since we're talking about, what are the tax savings, tax recovery strategies that we have, let's talk about that. Tadd, how are we thinking about tax savings opportunities, whether it's cash or P&L, from the current crisis, both from the domestic and global perspectives?
Sure. And, P&G is a very, very global company. We've got about 30% of our sales are in the United States, and about 70% are outside. So we're very focused on kind of what's going on around the world in terms of kind of tax policy and tax planning opportunities. But, I think the key thing right now is, again, continue to pay our taxes on time. But if we think about, what we're seeing around the world in terms of tax savings opportunities, and I won't really focus on the CARES Act, which is in the process of getting hopefully voted on today by the House, because I know we're going to talk about that in a little bit. But in general, certainly we're seeing, legislation around the world that is providing opportunities to defer tax payments, whether it's corporate income tax, estimated payments, whether it's deferral of, transaction taxes, whether that would be, sales taxes, value-added taxes, goods and services taxes. Certainly as governments are trying to improve the liquidity situation for companies, a lot of what they're trying to do from a policy perspective to do that is deferring payments of taxes, and we'll talk about a couple of those in the CARES Act. We've had countries around the world actually provide some exemptions from taxation for a period of time. If I think about some of the things China has done with regards to exempting companies from real estate taxes for a period of time. We've got countries in Europe that are talking about eliminating stamp taxes and other types of transactions taxes on financing as companies look to improve their liquidity situation by borrowing, whether it's externally or even internally within a group. Countries are proposing eliminating taxes on those types of transactions. So I think a lot of this is about understanding what those deferral opportunities are, as well as what those exemptions are. We've got other things, for example, where we've had some countries that have moved to a expensing versus depreciation regime for investments in equipment that are helping develop products to help get us through this crisis. So, for example, we've got a couple of countries that are allowing us to basically expense immediately investments we're making in putting together manufacturing lines to develop face masks, for example. And so a lot of this is just understanding what the opportunities are and then understanding how to take advantage of them. If I think about kind of another aspect of planning, I mean, certainly with markets down, with businesses decelerating in this environment, I think opportunities around monetizing losses are something to think about. And I know things we're thinking about, for example, we've got a lot of foreign affiliates. We've got a lot of previously taxed income that was generated as part of the one-time toll charge with tax reform. And, with the dollar strengthening and foreign currencies around the world depreciating, there are, to the extent we can figure out ways to repatriate those previously taxed earnings, we have a built-in loss in those earnings. And so maybe there's an opportunity to monetize that foreign exchange loss, for example. I think capital loss planning, bad debt planning, to the extent, again, that we've got a devaluation of investments and obligations we may have made either intercompany or third party. I think those are opportunities, for example, to potentially accelerate losses, particularly if this is a extended period of deceleration in the business environment. So, I think you'll see other policy interventions like perhaps charitable contributions and an increase in amounts that can be deducted as charitable contributions. So I would encourage all of you just to find your particular mechanism for understanding wherever you operate around the world or within the United States, making sure you understand what are those opportunities and how to take advantage of them. But certainly, I think we'll continue to see governments try to provide liquidity around the world, and I think that'll result in a lot of different opportunities for you, assuming you know what they are and can figure out how to take advantage of them.
Thank you so much, Tadd. That has been very, very insightful, especially that global perspectives that you mentioned. Very, very good ways to actually deal with this crisis. I want to ask Eric, from a state and local tax perspective, what do you think would be some opportunities that we should be looking at? Are there any other ways to find cash savings related to changes required by business operating in this new environment, Eric?
Yeah, sure, Magnolia. Thanks for everybody joining today. And I like, before I get into that, I like something that Tadd had said before, which is about the way that we're retooling how we're working. I'm sitting here in a bedroom. I don't have something growing out of my head. This is actually a sculpture behind me. But you can really teach old dogs new tricks. We've seen in our environment that people who are very dependent on working still in paper are required now to figure out an electronic world, and we're seeing people actually adapting very, very nicely to this. If you would have told me a month ago that I'd be doing lots of webinars and showing my face in my bedroom with something looking like it's growing out of my head, I would have said you were crazy. So I think even I'm one of those people that has had to adapt to the new environment, and I think the state and local jurisdictions are doing the same. What we are seeing at the federal level with some of the stimulus that might be coming out, the states are also looking at some ways to pump money into the economy to get some deferrals of taxes and give relief to taxpayers. But there are some, I don't want to call them winners and losers, because I think in this environment everybody is losing in some way. But there are certain industries that are doing better through this tough time. We've seen an increase in telemedicine. We've seen an increase in what Amazon and Walmart are doing in hiring some people. So some of the traditional incentives programs are still available to those who are growing, expanding, retooling, and doing some things that are still employing and hiring and retaining their employees and their workforce. And you're right, and the state and local jurisdictions give incentives for all of those types of things. But let's talk about some of the other areas that may be not quite so intuitive. Property taxes is an interesting one. Right now we have a bit of a down environment, and while most of the property tax assessment dates fall on January 1st, there are many across the country that do not, and that are still upcoming. And given this type of an environment, it is an opportunity to look at the assessed value of property, the values, especially of income producing assets that may be valued on an income method, and to be able to reduce those types of obligations on a go forward basis. It's also an opportunity, even with the assessment date of January 1st having passed, to think through, well, do the counties that are assessing property taxes, are they amenable potentially to some kind of a reduction because of the forward-looking view of the reduction in the value of that asset, even though January 1st has passed? And we've opened up some of those conversations. There are some other things. Ted talked about businesses retooling a bit. And we want to think about how businesses are doing that, and the availability of some cash incentives or cash reductions that might come from some of those programs. I was talking with a company that it's a micro distiller here in the Bay Area where I sit. I'm in San Francisco, and we have a micro distiller that is now making hand sanitizer, and they spent some money and some effort in doing and in retooling their processes to be able to make reductions in sales and use taxes on the equipment. They have had to do something restaurants in California and Illinois and in some other select state and local jurisdictions. They may have to charge sales tax on meals and beverages that are prepared to eat in the store, but they are not subject to tax on anything that leaves the store. So if you go to your coffee shop and you sit down, you drink your coffee in California, that is a taxable transaction that is subject to the state sales tax. But if you leave with that coffee, it is not subject to the state sales tax. Well, many restaurants and smaller businesses just absorb that cost. They don't actually charge the tax at the register. They absorb it in the amount that is just charged to the customer. So there is one flat rate, and then they back it out and pay it into the state on the back end. Right now is a good time to think about what that amount is that is going out to the states, because everything has been required on a to-go basis for restaurants and cafes. So it's a little esoteric and odd, but something that you might not think about. So the point is, businesses really need to think about the way that they're doing business and how that intersects with the state and local laws. A final thing that I'll bring up is look at the state economic development agency and the local economic development agency websites. As high up as the state of New Jersey Economic Development Authority, they're pumping out grants to small businesses and to others to put some money into their local economy, down to localities like small cities. Even Tallahassee, Florida yesterday came out with a program to help businesses with and then finally, and this is hot off the press, yesterday I was doing a negotiation of a sales tax settlement here in San Francisco. We had a remote call, and the taxpayer pled a bit with a protest officer on an issue about the plight of the business right now and how difficult times are. And the state of California actually negotiated a settlement of a very, very small percentage on an assessment, saving the company a good amount of money. And I think we're going to see that with the state and local jurisdictions, allowing taxpayers some leeway or maybe settling on issues that are out there to help companies conserve cash in a way that maybe they haven't before. Magnolia, I'll turn it back to you.
Thank you so much for that, Eric. And just a tiny little follow-up questions, with this expected economic contraction. Are there any ways at the state or local level to save tax dollars? Maybe one, like I'm just thinking property taxes off top of my head, but can you elaborate on that?
Yeah, so I mentioned a little bit about property taxes and the assessment dates because we know the values are going to go down. So there is some forward-looking aspect to that, but again, as I said, January 1st was an assessment date, and some of the property that is valued as of January 1st is valued on an income method, and the income production of those assets is going down. So there is an opportunity where the assessment date is January 1st, but the actual assessment comes later on in the year to reduce those tax obligations. Another one to think about, and this is on the also.
Eric, you're cutting out a little bit, Eric. Here. Eric. Eric, I think you're cutting out.
Talking about is he's looking at mining.
Okay, Eric, if you don't mind, I think you cut out. Can you kindly repeat what you just said? You cut out there a little bit. Eric, I think you're muted now. Okay, you're not muted, but
Okay,
okay,
there. We're back on. We're back up.
Okay.
All right, there we go. The fun with technology.
Yeah.
We'll make it work.
Okay.
Yeah. So great. So another piece that links into what Tadd was saying is he's mining the not operating loss opportunities, and on the federal government side, we're going to see something.
Okay, you're cutting out again. Sorry.
Eric, what we'll do, so this is...
on the state side, I think...
Yeah, Eric, so what we're going to do is we'll come back to this because it's actually very important for people to hear. But we're going to give you a moment to work on the audio. You might be able to actually call in too, so you can still do the video, but just do the video without audio and then call in on your phone. So,
right. Okay,
Magnolia, yeah, we'll give him a chance, and then if you want to come back to that.
Yep, we will just come back to that second piece.
I think mute just came.
Go ahead.
Okay,
Eric.
are we back on? I think we're back on.
We're back on. We hope that this time it's gonna continue on.
Okay, so I think we're back on. So maybe we'll come back to a little bit of the state piece on the federal stimulus. But in terms of other state tax savings, there are some things on the sales tax side that people should be mindful of. In this environment, we might see some deferrals of payments and potentially some bad debts that occur. Where people are able to pay on their invoices, but you may have already taken into account on an accrual basis the sales tax that would be paid into to the state. So something to really watch out for, because if you don't look back and take advantage of bad debt deductions for sales tax, which a lot of companies don't because the bad debt experience is so small that you don't really think about it when you're doing your sales tax compliance, but you might want to go back and make sure that there is a new process in place to be able to capture the bad debts in this kind of an environment going forward. That can be a cash saving mechanism.
Perfect. Well, thank you so much, Eric, for that piece on state and local tax. I know a while ago we talked a little bit about this big piece of legislation about the stimulus package. So why don't we go and shift gears just for a little bit to talk about this CARES Act. This was last Wednesday when the Senate passed the third bill in a series of relief packages related to the coronavirus pandemic, and it's Coronavirus Aid, Relief, and Economic Securities Act, or CARES Act. I would like to turn it over to Brandon now. Brandon, could you please take us through this CARES Act and let us know what are the highlights of this CARES Act?
Sure. Hi. Thanks so much. I do also just want to mention really quick that based on what Tadd said originally, I have been really encouraged by how the business world has really continued on for those companies that are not really shut down by the virus. Everybody is kind of really business as usual as much as possible. And yes, our business continuity plans have worked well. It's good to see. And Eric, by the way, if you can hook me up with a hand sanitizer from your microbrewery client, that would be great. We all could use some. But as far as the CARES Act, I mean, Treasury seems to be doing what it can to really pull out all the stops. I mean, this is really unprecedented, what we've seen. I think we learned some lessons from 2008, certainly, and they've done really a great job so far. There's two pieces of legislation so far, the Families First Act and then CARES Act. There's going to be more from what we understand. I'm going to focus really on the business aspects of it. And of course, the larger enterprises, so over 500 employees, there's a lot for under 100 employees, under 500 employees. The focus here is going to be, if that's okay, on over 500 employees, given that we're dealing with more of a tax department focus here. And CARES Act, the business provisions in that that we'll focus on. Number one, the payroll tax deferral was certainly something that is very beneficial. Companies are able to take their 6.2% for Social Security payroll tax and defer it, the 2020 amounts, to pay half of it at the end of 21 and half of it at the end of 22. That's really with no penalties, no interest. It's basically a loan that the federal government's giving to all companies, every single employer, not just for-profit businesses. Obviously, it applies to nonprofits as well. For businesses, NOL provisions, that's definitely something that companies should look at. You really have not just an opportunity to get cash and monetize those NOLs for 2019 and 2020 and 2021, but what you're able to do then is carry it back for 5 years, which allows you to arbitrage the rate. So we have a corporate tax rate of 21% now, and the corporate tax rate prior to that, 17 and before was 35%. And so companies will not only be able to get the cash, they'll also be able to immediately get some monetization, an earnings benefit. They'll be able to pick up the difference in their valuation of losses. And so that's significant. The other part is the interest limitation changes. The restrictions from the 2008 taxes have been loosened a bit. The 2018 tax bill and tax reform was loosened a bit to allow companies to, instead of be limited by 30%, they're limited by 50% when it comes to the ability to deduct the interest for companies that have very large credit facilities. The other part is AMT credit monetization. I think that we should mention, and that is for alternative minimum tax, which was eliminated, a lot of companies had credits left over. So the Treasury is allowing companies to monetize that and really get it back in cash this year, which is something that companies should look at, act on right away. So there's a lot of cash that's coming from Treasury to businesses in any way that they could really figure out, it seems. And I think the biggest one that will be surprising for a lot of companies that have done a very good thing, and we have a lot of large employers that have done this, which is to continue to pay people who are not needed and they're not working. So restaurants and hospitality employers, all types, and many employers that maybe they have critical operations that are and essential operations that are continuing, but some operations that are not continuing or not needed right now, and that is the ERTC, the Employee Retention Tax Credit, which is unique in several ways. It really does borrow from some other concepts of other tax credit programs, but this is scored at about $55 billion. I think it might be bigger actually than what they're scoring based on what we're seeing. But basically, it is providing a tax credit for companies for 50% of the wages that they pay to employees that are not working. So, for example, you take restaurants have gone from, say, a restaurant employer with 20,000 employees, and that employer is now only servicing takeout, and some of their stores are completely closed. Say 10% of the stores, or not surprising, 20% of the stores are completely closed. So those companies have now, they've got half of their workforce oftentimes that are not needed. And so those 10,000 employees, many of them, I would say most of them, of the larger ones, are continuing to provide payments to those employees during this period. And so they would get 50% of the wages, as well as the healthcare benefits. And we've got this question a lot. So a lot of companies, even if they've had to furlough employees without pay, they're continuing their benefits. So they would still be able to get a tax credit of up to 50% of those amounts. Now, the 50% is capped at $10,000 in total compensation. So that, for a lot of waged employers, you're talking about waged employees. You're talking about employees getting $200 to $400 per week. So that would last anywhere from 20 to 40 weeks, based on what we've seen. And the benefits can be really, really significant for companies. Now, the way that the credit is actually monetized is different than what you see with other tax credits. This is an actual payroll tax credit. And so companies will be able to reduce the amount of payroll tax that they pay. And to the extent that the amount of the credit is more than the credit, more than the amount of taxes that they would owe, there are mechanisms that have been put into place to refund that quickly. And even for second quarter, since you wouldn't file for your return until July, there's going to be advance payments where really Treasury is going to advance those tax credit amounts to companies before they even file. So, and to note again, this also includes nonprofit organizations that really need this as well, and that are really trying to do well by their employees by continuing to pay them even if they're not able to work. So it's I would say if you kind of look at this, the R&D credit is one of the largest tax credits. Is the largest tax credit out there for business incentives. That's about $10 billion, $11 billion a year. This is $55 billion. So it's safe to say that this is the largest tax credit business incentive tax credit program ever created.
Thank you so much, Brandon, for giving us a very, very good summary of the stimulus package, stimulus bill. I was reading through it. It's about 883 pages in total. So being able to actually give us a good sense of what are those important tax provisions, that's really very helpful. I'd like to turn it over to Tadd. Tadd, do you have any other thing to add with what Brandon has shared?
No, I mean, Brandon, that was an excellent job of summarizing an act that hasn't been out very long. I mean, I will say, you said it, we're in unprecedented times, and unprecedented times require unprecedented measures. And to see a bill of this magnitude go through on a bipartisan basis as quickly as it did is quite phenomenal. I would mention, this is on top of other measures that have already been taken out, for example, by the Federal Reserve. I mean, we've had, interest rate cuts of about 150 basis points. We've got the Fed stepping up and backstopping commercial paper facilities and the credit markets in terms of making sure that there's still adequate liquidity within the business sector. They've announced larger asset repurchases. So this is in addition to a lot of measures that have already been taken over the last couple of weeks. And I think, reflect the fact we did learn a lot in 2008, 2009. We've pulled out of the playbook a lot of those things that we did in 08, 09 to kind of get the economy back on track. And the good news is that they haven't used all the tools in the toolbox yet, and there's still other things that can be done should they be needed, and hopefully they're not. I would say, this CARES Act is a patch. It's not a panacea. I mean, it targets liquidity to people and companies who need it most. And I think it's big enough to, at least keep the faith in potentially an economic rebound. So I think just psychologically, it was very important. At least my understanding of the bill, it's relatively balanced and targeted, and it's immediate, which I think is critically important. Very expensive, as I said, but I think there are some great thought behind some of these provisions, and I do think it will achieve some short-term, hopefully, stability. I think more interesting is if you think about this on a longer-term basis. I do think when we get through the crisis, it's likely to bring up what is the role of government on a go-forward basis. And, and obviously this is going to create a larger deficit issue that's going to need to be financed. And so I do think this will eventually evolve into how do we continue to fund the government? And that will lead to some interesting policy debates. And how do income taxes play into that? How do other forms of taxes like consumption taxes or environmental taxes play into that? So I think even as we get through the crisis, we'll see that this will have a longer term impact on tax policy and government fiscal policy. And so that'll be something that we'll all need to stay in tune to and probably help play a role in that thinking. But in any event, it'll be interesting to see how effectively all of this is implemented. I'm sure it'll create a lot of different compliance challenges, with regards to ultimately sustaining your ability to avail yourselves of many of these provisions. But overall, I do think it was, I hope that it provides some short-term optimism, and it works as it was theoretically designed to work. So nothing else to add, I think, besides that.
Thank you so much, Tadd. I'd like to turn it over to Eric. From a state and local tax perspective, are states following suit with respect to the stimulus package to assist businesses? Hello, Eric, I think you're okay.
All right, I think we're there, right?
Good.
There we go. I think I was muted. So thanks, Magnolia. So the state and local, the states actually have a bit of a constraint that the federal government doesn't have, and that is that the states have to balance their budget. They can't run deficit spending. So if you go back to when the Tax Cut and Jobs Act was enacted a couple of years ago, the states really had to scramble around to figure out what that meant for their budgets. And now here we are again, where the federal government is enacting new programs and new stimulus in their tax package to try to stimulate the economy. The states have the constraint of needing to balance their spending with their intake. So the good news is that many of the states conform directly to federal provisions. So as the Internal Revenue Code changes and provides some of these incentives, about a third or more of the states actually directly conform to that, and then the rest have to update their conformity. And what we're seeing at the state level is kind of a wait and see. Is we don't know right now. I mean, the California legislature right now isn't even in session. Many of the other legislatures have also taken a break during this crisis to kind of stay away from each other as best they can. Other legislatures are trying to do some things on a remote basis. So we really don't know what will happen at the state level. The chatter is that many of the states will follow suit and try to enact provisions that align with what the federal government has done and try as best they can, given the constraint on the state budgets, to align with federal. What they have done is moved the payment dates. There's a plethora of materials that are out there from our firm, from the Big Four accounting firms, from law firms, from taxpayer groups like the Council on State Taxation, and others that show what the states have done with respect to deferring payments, and that's a very important piece to allow some conservation of cash, and we're seeing those provisions get enacted daily, and we've been updating those charts on what the states are doing on a real-time basis. There are some oddities that are coming out, and I think just like the federal government is doing technical corrections, we've seen the same thing at the state level. For example, the Franchise Tax Board in California said that everybody that is an affected taxpayer can get a tax deferral. So any payments that are due between March 15th and June 15th are now moved to filing deadlines and payment deadlines starting in July 15th. And an affected taxpayer was not defined. So everybody said, well, what does that mean? And the Franchise Tax Board finally came out in a Q&A on their website. It's kind of buried on the Q&A, but it says that everybody is deemed to be an affected taxpayer. So you don't have to be in a special circumstance. You don't need to be, if you're in a county in the northeast corner of California that doesn't have a COVID case, that doesn't mean you're not an affected taxpayer. Everybody is deemed to be an affected taxpayer. We have a compatriot to that, which is California listed the taxpayers that get an extension and a deferral and left out a couple of types of entities. But the intention again is that everybody would be able to get this kind of a deferral. So we have to be mindful of some of the state provisions and what they're putting out and what the intention is versus the language. And we're having a lot of conversations with the state governments around what do they really mean with respect to some of these deferrals.
Wonderful. Thank
Magnolia?
you so much. Thank you so much, Eric, for that. We only have about 13 minutes left. I have one last question to all of our panelists, but I'd like to open this up to our audience. If there are any questions at this point, keeping in mind that we have 13 minutes left, do you guys want to ask our panelists any questions? I'm not hearing anything from anyone, so I assume there are no questions for now. So with that, I'd like to turn this over to all of our three wonderful speakers today. I have this very last question. You know, given this crisis, everyone has been saying uncharted waters, unprecedented times, you know, really people are just feeling so particularly vulnerable. I was listening to a call a while ago. You know, my husband was on the phone and you know, they're talking about their business, their company, and people are just really stressed. And his CEO was saying, well, you know, this is a stressful time for everyone. And therefore, some people, when they're stressed, they're not able to cope with it very well. They can't manage it. As, you know, leaders in your fields, what are your perspectives, Tadd, Eric, and Brandon, on leading in a crisis like this?
I mean, I can start, and apologies if this sounds a little bit like a laundry list, but I was trying to think through this question through the prism of my interactions with leaders at P&G. But I think, you know, first and foremost, it starts with empathy and having leaders that can understand your particular circumstances and can be sympathetic to them. I think making sure that the health and well-being of your employees and their families is critical, and I think that's a key leadership attribute. I think, you know, strong leaders continue to remain positive and cool under the pressures and difficulties of the current environment. And I have found, you know, the leaders that I've been in contact with to be available and flexible on when we get together and talk about priorities and talk about solutions to some of the business issues that are coming up. So I think understanding that each of us has different conflicting personal and work priorities, and being flexible with regards to how we get together to resolve some of these, I think is a key attribute. And I come back to where I started earlier, is making sure that the organization knows what the priorities are and what they're not is absolutely critical. Otherwise, we are at risk of creating complexity and not achieving what it is we need to achieve in the short term. And all of this goes without saying that, communication. We cannot overly communicate in this scenario. And so, as I think about the leaders I'm working with, those are pretty common attributes amongst those that are, I think, effectively leading at this point.
Thank you so much, Tadd. I wanted to quickly, before Eric and Brandon chime in on this question, there was one question that actually came in a few minutes ago. Can you please expand on AMT credit? Anyone can answer that. Tadd, Eric, or Brandon?
Sure. You want me to take that? So the AMT credit. If companies have AMT credits, the provision in the CARES Act was made so that the credits basically would be able to be recovered and claim a refund today, even though technically you wouldn't be able to get them as refundable credits through to 2021, but tax year 2021. But you can actually go obtain a refund now for those AMT credits that companies had and get cash. Does that answer the question?
Yep. Okay. Yeah, thank you so much, Brandon. And if you wouldn't mind, continuing with that question that I posed.
Yeah, so I think it's really important, as a lot of things Tadd was saying. I mean, communication is really important for me, from my perspective. This is, I think people have to understand, I mean, I don't think we will really understand the trauma of this psychologically to everybody until it's over fully. And so I think it's important that we remember with our people that, that this is definitely affecting them personally, even if they're not consciously aware of it. You need to talk to people. I try to check in with people and make sure it's not a business-related check-in, just to see how they're doing, how things are going. Make sure that everybody knows that you care. Make sure your managers know not to hesitate to bring things to you if an employee is in need. So, everybody thinks you're in crisis mode, so they don't want to bother you with their small needs that they have on an individual basis with everything that's going on. So I try to encourage managers to know and to remind everybody, if someone needs help, if someone needs some type of accommodation, if someone needs really a specific attention and support from the company, that's a priority, even though there are a lot of very important priorities. So that's important. And the other thing is, just celebrate wins as much as possible. It doesn't have to be kind of a major win, just accomplishments that are happening in the organization. That's very important. And so, but then when it comes to managing through this right now, I think everybody does have to make sure that they're paying attention to contingency planning in their business as much as possible. And so, as we see, risk happens, right? Things that are risks that nobody would think would happen do happen. And so, you need to make sure in whether you're in tax, whatever you're in any area of the business, that your contingency planning is a process. It is not just ad hoc. It is not just something that you're going to think about and then leave. It's a constant, ongoing process to make sure that you have kind of categorized and made an inventory of all the things that could happen. Companies that you would think would never have a problem paying their bills, all of a sudden stopping paying their bills. I mean, your business could be going fine, but then your clients obviously could stop paying you, and then you would have a liquidity issue yourself. I mean, all types of things that you need to as a process, categorize, inventory, and be constantly revisiting and paying attention to, and looking at kind of what you will do, you know, looking forward when it comes to contingency planning. So those are a few things that I would mention, and I would hand it over to Eric for comment more.
Yeah, thanks, Brandon. I think I'd echo everything that Tadd and Brandon said, and it's tough to add more to that because I think they said so much that I absolutely agree with. You know, one of the things I would say is we talk about communication and making sure that you're staying connected to everybody, but I'll boil down what those comments are also to engagement, to make sure that your people are engaged. Not just that you're talking to them and checking in with them and everything, but a level of engagement. That could be engagement in a technical area, in the area that they work in a personal area, just to make sure that that there is some level of connectivity. I have seen with managing a very large team of people and dealing with people across the country, different people, this is affecting people in different ways, both personally and work-wise and just overall. So at times you can see when you're talking with people that the level of engagement is slipping, and trying to find what the issue is and to try to figure out how to get them back engaged is at times difficult because it is very personal to different people. I have people on my team that are diving headfirst into work, and it's almost like their escape. And others who, because of personal circumstance, really need to take time to deal with family issues and other issues, and have had a harder time balancing. So we're having some people on the team that are pitching in and helping out the others that have personal circumstances that is taking them away from some of their otherwise obligations. So I think people are willing to put their arms around each other, willing to help, but we need to actually know what help people need in order to keep that level of engagement. And I think also, don't forget about fun. We're human animals. We like to have fun with each other. We like to laugh. We like to have a good time. This afternoon, we're doing a virtual trivia, and we have our trivia teams that are all going to be on Zoom. Hopefully my Zoom actually works better than it did today, but we're going to have the trivia teams doing trivia this afternoon. And part of the trivia is just kind of fun, typical pub trivia. Part of the trivia is actually going to be about the new Tax Act, about the Relief Act, about some of the new provisions that are coming out, and it's going to be connected to the business. So there's a little bit of a work aspect to it, a little bit of a play aspect to it, but at the end of the day, we're all trying to have a little bit of fun together while we connect and try to engage. So I boil it down to keep people engaged as much as possible.
Well, thank you so much, Eric. And thank you so much, Tadd and Brandon, also for sharing your thoughts on leadership. I think those are very, very well said. We only have 2 minutes left, and I want to be mindful of that. So with that, we'll have to bring this discussion to a close. To our audience members, if you have additional questions, please send them to info@taxforward.org. And don't forget to please complete your survey. Your feedback is crucial to providing valuable programs and helping our speakers. Surveys close Monday night at midnight. And CPE credits will be emailed once surveys are completed. Highlights from and copies of this webinar will be posted to our website next week. Please join us for a webinar in 1 hour on personal finances and investment. A very interesting topic. So thank you once again to our panelists. Thank you for your time, for preparing for this conversation, for sharing all your expertise with us. It's been really great information that you have imparted today. Again, thank you to everyone, and I hope to talk to you again soon. Stay safe and healthy, everyone.